Welcome back, everyone. Here we are at Tech Tune Up with Paul Meeks. I'm your host. Today is November 2024. We have a lot of good stuff to talk about. And so, without further ado, let's get right into the elephant in the room. In a couple of hours, we will have Nvidia reporting their quarterly results. And obviously, it's a big deal. I'm going to preview it right now, and then I will come back on Benzinga's YouTube channel later today about 4:45 Eastern when the results will be out, but it'll be before the 5 o'clock call to talk about what really happened and what I think about it. So stay tuned for all of the above. So everyone knows that the tech world and even the broader world is chomping at the bit for this company to announce their results. If you're going to put a marker in the sand, the street is expecting officially $33 billion in revenue. I actually think if they don't deliver at least 35 billion, you might have the stock down tomorrow. So there's the official expectation, and then there's what we call in the street the whisper number, which is $2 billion higher. And of course, you'll have a proportional beat in EPS too, and then also take a look at that guide for the next quarter. Now, one of the things that has been rumored in the last couple of weeks, but not confirmed by the company, maybe yay or nay tonight on the call, is that they're having a overheating issue with the next gen Blackwell chip. If they do, if they don't, I don't know, but I will tell you this. They are so far ahead, and the outlook for continued AI infrastructure spending is so strong that say they have a manufacturing glitch, say they have a delay. The problem will be, okay, you delay some revenues, but you don't lose those revenues. I only worry in this situation when you have a company has a manufacturing glitch, they cannot deliver product. In the meantime, somebody else swipes those sales. Don't think it's going to happen because no matter what, glitch or not, Nvidia is so far ahead. And I thought it was kind of interesting tell that last week, the logical second source for these GPUs, Advanced Micro Devices, announced that they're going to fire 1,000 people, which is a big chunk because that's about 4% of their global workforce. And I do know that AMD is not a apples to apples comparison because they do have a legacy, mature, slow-growing CPU business. That's in some trouble. Consumer electronics has been weak. But the magnitude of that cutting slash tells me a little something. Nvidia is going to be cool because in the meantime, all of the 4 key AI hyperscalers have already announced that they're going to spend, just these 4 companies, about $250 billion next year on AI infrastructure. And of course, the lion's share goes to your buddies at Nvidia. So I think what happens is they beat the numbers. But if they don't beat the revenue number by the 2 billion, 33 billion is expected. They got to do at least 35 billion. I think the stock could go down tomorrow. Here's what I do. Say right now the stock trades for 146. If it were to dip to its 50-day moving average support, which is 133, about 8% below here, I probably take that as a buying opportunity. Because again, if there's any sales disappointment, because of the manufacturing glitch, it will be temporary, not permanent. So that's what I think about Nvidia. Come back in a couple hours. I'll have some more. Next on my list is T-Mobile. Now, T-Mobile is a stock, as you may recall, we sold here from the fresh money buy list a couple of weeks ago, simply for one reason, valuation. And now it looks like T-Mobile might be in some trouble, right? They've had a security breach, obviously from the Chinese. This ain't good, but in the meantime, I had removed it from the list. Just wanted to keep you updated on it. The next thing is interesting me. There is a company in China you may never have heard of. It's called Xiaomi, and they have a new SUV. And this SUV is priced at 29,000 US dollars, so it gets pretty close to the mass market price point. It's not sold in the US yet. Someday it will. But here is a company whose product is super popular and it's at the right price point. the price point that Tesla said it was going to get to eons ago, but never did. I think this is a game changer. And in the last 9 months, because Xiaomi has announced their results in China, this particular product, their EV business, is up 200% in 9 months. So watch out, Tesla. Next, I think we'll just get back quickly to AMD. I am worried about AMD because no matter what they say, no matter what the business mix, you fire 1,000 people or 4% of your global workforce just a couple weeks before the end of the quarter. That ain't a good sign. That ain't a good sign. Next, we have a company and a stock that had done great for us on this program. But luckily, we sold it when a short sale report came out last summer accusing Supermicro, one of the big AI server companies, these servers that go into data centers. They were accused by Hindenburg Research back in July, August timeframe of financial shenanigans. And it looks like it was a legitimate complaint because they were unable to file their annual report in July. They were unable to file with the SEC their quarterly report for the quarter ended September 30, and they were forced to change auditors. And they finally got an auditor to take the job. I don't know if I'd want that job. And they have filed a plan with NASDAQ, which was necessary so they wouldn't get delisted from the exchange. We'll see what happens. I know some people with this pop on these most recent moves off the bottom because the stock had dropped about 80, 90%, might be tempted to get back in because sure, the demand for AI servers is still very strong. And they split this market with Dell and Hewlett-Packard Enterprises in the United States. The problem is you can never buy a stock. And this is your finance and accounting professor at the Citadel talking. You cannot buy a stock unless you have comfort in the numbers. And what's going to happen when they finally reissue this 10K annual report and the 10Q, the quarterly report, they're going to have to restate numbers going way back. And if it's just a small restatement, okay, it might be a better buy now. But what happens if it's a major restatement? If it's a major restatement, all bets are off. And so anyway, you might be tempted. We made a pile of money here on Benzinga with that stock, but I'm saying stay away until we see the white of their eyes, which is the new data. The other stock that is coasting in the wake of Nvidia today is Palo Alto Networks. Palo Alto Networks is a very important cybersecurity software company, and they're going to report tonight. But of course, their report is going to be overshadowed by Nvidia's report. I've been kind of struggling as to what stock in cybersecurity software that I want to pin my hopes on. For a long time here, and we did very well at Benzinga with CrowdStrike. But then when CrowdStrike got themselves wrapped around the axle with the software glitch that knocked down Delta and the entire US airline industry, I had to back off because CrowdStrike says that their damages for the outages at their customer are going to be limited to $60 million. Well, only one of those customers, Delta Airline, is asking for $500 million. So until this winds through the courts, I can't go back to that stock. So for now, I'm into Palo Alto Networks. We'll see what they say tonight. I kind of like Sentinel-1, ticker symbol S. I've talked about this here on the podcast. With that one, I think it's kind of a better valuation, poor man's Palo Alto Networks. But we will get a nice tell about the entire industry this afternoon when Palo Alto Networks reports. I think this story next is pretty interesting. So you might have known of Hims and Hers, right? You see the ads on TV all the time. If you're like a middle-aged dude and you got some erectile dysfunction, Hims and Hers will, correct the problem and send you some discreet drugs. Awesome. However, Amazon has announced that you're going to be able to do that through them too. So this is going to be another situation where Amazon is going to disintermediate the competition, just like they have done when they started with books in the 1990s and went through one industry after another, after another, after another. But I do think this could be a pretty interesting additional revenue generator for Amazon. Meta has been fined, like all these guys are, under the watch of the European Union, who is very, very tough on our US tech companies, particularly the social media names. But unfortunately, Meta had to pay over $800 million for abusing their marketplace ads. You'll see more of this. And you know what? I don't think it gets much better under the Trump presidency. So we'll have to see what happens. I will tell you this, out of the well-known Mag 7, I own them all, and I've owned all of them for years, so I have big gains in them. The only ones I would buy today, Amazon and Nvidia. I wouldn't buy the other 5, including Meta, though it's a company I admire. This is interesting, the next bit. Another company you may never heard of, but it's very, very important. It is the Asian company Foxconn. Locally, the company is called Honhai Precision. They make products like the iPhone and earbuds for Apple, and they're a contract manufacturer. This is kind of interesting because one of the things they also do is slap together others' designs for these AI servers that go in the data centers. Remember, I told you that is the purview, at least in the United States, of Supermicro, Dell, and Hewlett-Packard Enterprises. Foxconn just announced results. Their own AI server business is skyrocketing. Gives us another good data point for Nvidia. But here's the good and the bad. It confirms the thesis that AI infrastructure spending continues. That's the good part. The bad part is Foxconn is known for low-cost labor. That's why U.S. companies go to have them manufacture the stuff in low-cost geographies, but also razor-thin margins. So if Foxconn ends up taking a bigger and bigger slice of this market, and everybody has to play down to Foxconn's price, that could squeeze the businesses and the profit margins of Supermicro, Hewlett-Packard Enterprise, and Dell. The last company I'll mention here in this particular section is the German semiconductor company Infineon. Now, why is this a tell? Infineon is an analog chip company. Think about Internet of Things, nothing to do with AI. And their biggest vertical market, autos. I'm not talking EVs. I'm talking legacy vehicles. And they gave such a dire forecast that we must stay away from all semiconductor companies that are focused on the auto vertical. So, you know how some people say bad dog? I say bad auto. And just take a look at the results from Infineon. So now let's take a look at some of our stocks that we like. Here's my tech list, always short and sweet. Trying to add some value here. So far, so good. We've been knocking it out of the park for Benzinga. Labeled in green. These are my fresh money buys. Yellow are stocks that I probably hold, but I just hold them. I'm not buying them now. And then red are stocks that I'm punting on. So anyway, take a look at my list. Micron hasn't done much recently. I don't expect it to do anything, but I do expect when you come back 2 years from now, because of its dominance in high bandwidth memory, they will do very well. Stocks now, 100-ish, a little bit less. A year from now, 140, 150, easy, I think. Microsoft and Meta, I told you, of the Mag 7, I own them. Not too fond of buying more of those. Amazon, I like very much. Synopsys, I'm starting to warm up to, but we don't have a quarterly check-in with them until December 4th. Unfortunately, Nvidia, step on the gas, man. This is going to be going down in just a couple of hours. Broadcom and Dell, other AI infrastructure plays. I very much like Taiwan Semiconductor. Now, Taiwan Semiconductor has been whacked a bit recently because, you know, the Chinese think that Taiwan is their own, and they may even push that further, or maybe they back off under the presidency of Trump. I don't know, but there's some geopolitical risk for sure. But there has been that same geopolitical risk with this company forever and ever and ever. Alphabet, I'm interested in. They finally had a real beat quarter last quarter, but I'm just hanging in there with Alphabet. You know, Alphabet could be under the crosshairs, not of the Biden administration, Department of Justice and Federal Trade Commission, but the same cast of characters when Trump takes office in the third week of January. So it's too much legal risk. Arista Networks, I sold recently. I think I might have even talked about this last time, purely on valuation. It had gone too far, too fast. Sentinel One is one of our plays. Let's call it the honorable mention play to Palo Alto Networks in cybersecurity software. Again, we'll get a read on Palo Alto in a few hours. Tuya is my Chinese Internet of Things company, but I only buy it at its low of $1.28 per share. They're going to report soon, so at least it'd be a reasonable check-in. Oracle, I like very much, particularly with what they're doing in Oracle Cloud. They're definitely at least an indirect AI play. However, the stock has run past my price target, so I'm just holding it and playing the mo. Guidewires, another company I like, but just waiting. ASM Lithography is one I've been buying recently. Now, ASM Lithography for me is a long-term play. I have long-term plays like Micron and ASM Lithography, and then I have short-term trades. This is a long-term. When I say long-term, I'm expecting a big, big move, not years and years from now, within a year, year and a half, 2 years. But this stock has been absolutely crushed. Part of it is it gets wrapped in the nastiness with the export restrictions on technology between China and the United States. But this is the only company really that has EUV technology, extreme ultraviolet technology, which is absolutely imperative for the latest chips. And they're essentially an oligopolist, or maybe a duopolist with Tokyo Electron in Japan. Anyway, that company will come back. It's got to. The whole semiconductor world depends on it. However, in the meantime, it sucks. I mean, take a look at the chart. It sucks. And then Williams Companies. This was my kind of clean energy play, the way to indirectly pay powering data centers. And these guys are a big natural gas player with deals to provide their energy to emerging AI data centers. Stock has been great since I recommended it. It's gotten a little bit ahead of itself, but I'm still holding it. So those are my tech picks. You know what? I bet my list might change a little bit tonight because two of the names on the list are Palo Alto Networks and then the big boy, Nvidia. So let's finish up with some tech trends. So first of all, as we get into this final segment, I hope you've been shooting some questions at us, because when I get done with this in a couple of minutes, I'm going to answer your questions till the cows come home. But remember, I got to prep for that Nvidia call when I'm back on Benzinga in a couple of hours. So first of all, you know, I am so entranced with the level of interest rates, because the level of interest rates is an important discount factor to discount cash flows of all my tech companies. It is a really important component of valuation. So now we have a new president, and we had a meeting of the Fed 2 days after Trump was elected on November 7th, and the Fed lowered the Fed funds rate by 25 basis points. The next meeting is scheduled for December 18. At that time, you will still have Biden in office for another month, but you might get a greater sense as what Trump is going to do once he takes the reins. So right now, the CME FedWatch tool, which everybody has access to online, tells you that there's a 59% chance that the Fed will cut another 25 basis points on December 18, which means there's a 41% chance, which is actually pretty high, that they're going to do nothing. They're going to stand pat. And so I think this is going to be a real tell by the Fed. And of course, it's going to be wrapped up in geopolitics and a bunch of other shit. But this is going to be particularly important as we start to take a look at monetary policy as we ease into the Trump reign. I will tell you that even though he badmouths him all the time, he did nominate, and he was confirmed when he was president the first time, the Fed chair, Jay Powell. And if you look it up, Jay Powell's term does not end until the spring of 2026. And it would be unprecedented for the president to fire the Fed chair. But you know what? Trump does what Trump does, and that'll be very interesting. Right now, you know, he's doing a lot of trash talking but he really doesn't have legal authority to fire the Fed chair, but we'll see. Next, one of the things that's happening is in the last month or so of the Biden administration, they want to clear the deck of all of these lawsuits that they brought over time against big tech. Like recently, they were hammered by, or at least Google was hammered by what's coming down from not only Department of Justice, but the Federal Trade Commission. So obviously, when Trump comes in, there will be a new chair of the Federal Trade Commission. There'll be a new head of the Department of Justice. It'll be very interesting to see what they do with these open cases. Do they shut them down? Say, never mind, we're going to be passing on some of these things? Or are they going to not only resume these cases or continue these cases, but they're going to make it worse? And so I actually don't know what Trump's going to do. Right? He's very positive for things like crypto, but based on his comments, he definitely hates Mark Zuckerberg over at Meta, and he'd be happy to continue to skewer some of these social media companies. We'll see what happens. But in the meantime, the Biden administration is going to try to clear their cases before they are forced out. Also, something that might be impacted by Trump's new reign is, you may recall in 2022, the Biden administration suggested, and it was passed by Congress, the CHIPS Act. Now, the CHIPS Act gives billions of dollars of companies to build semiconductor manufacturing facilities called fabs here in the US. Like, for example, several $1 billion goes to build 3 fabs in Phoenix, Arizona, and that builder is Taiwan Semi. There's another big Samsung, the South Korean company, fab in Texas. And then you have a major fab near Columbus, Ohio with Intel. So anyway, this money has been partly dispersed. What happens if they don't disperse all of it and we get to Trump? Will Trump just say, never mind, repeal it? It'll be very interesting. But that's also something that they're going to try to get this money to flow before the 3rd week of January. We will see. Another thing that's very interesting is, you may not know this, but there is a landmark case, at least in my view. Nippon Steel, obviously Japanese, wants to buy U.S. steel. And they've wanted to do that for a year or more. And so far, whether you're the Biden administration or you're the Trump administration, particularly President-elect Trump on the campaign trail, they say no to this transaction, right? It's a foreign usurper. I tell you, this transaction is really, really, really important for the health of U.S. Steel, an iconic company. They need Nippon Steel, and Nippon Steel has guaranteed factory builds and hires in the state. So I actually think it's a very good deal. But this is going to be something that will either be blessed or not, probably before Trump takes office. It's really important. A lot of people don't know about it. Nippon Steel's potential acquisition of U.S. Steel. AI spending, I said just now, every time I turn around, the forecast for AI spending, which is mostly data centers and servers, continues to escalate. Now, we look like we're going to spend at least $250 billion in 25. And the last trend I want to hit on, this is very interesting. Private companies always want to become public companies because that's the day the venture capitalists and the founders get rich, when they have an IPO. But the IPO window has been slammed shut for a couple of years. So everybody's been waiting. We're starting to get some early signs that the tech IPO window is starting to crack open. There's a European fintech company called Klarna, which just announced a filing in the United States. And I think you're going to have a company by the name of CoreWeave, which is a cloud data center company that's in cahoots with Nvidia. I think that they're going to go public as soon as the first quarter of 25. And believe it here, that will be the biggest IPO of 25. If you have a chance, like I did for my clients, to get some private shares of CoreWeave, it's going to be a biggie because it's in cahoots with Nvidia. So look for CoreWeave specifically as a potential investment. More broadly speaking, I like the fact that the tech IPO window is opening because that'll bring a lot of support for the market. So those are my tech trends. Let's get to some questions. Hey, Paul, please share your thoughts on crypto. Appreciate it. Well, thanks for your question. I have never really been a crypto fan. Maybe it's because, you got a 60-year-old dude talking to you. I can't value it, but I will tell you what I did. For my clients, as soon as Trump was elected on November 5, I bought some GBTC. I brought the Grayscale Bitcoin Trust. And I actually sold it yesterday, up 30% in just a couple of weeks. Because obviously, Trump is pro-crypto. And he's going to loosen regulations. A lot of good things would happen. I think his buddy Elon Musk, who some people think is the de facto president, is whispering in his ear. But obviously, a new paradigm of crypto friendliness. And so I made a quick 30% trade, but I closed my position. I guess if you held any kind of crypto, you're speculating, right? Because it's not a asset that you can value. I might continue to hold it a little bit longer, play the momentum. I might have sold it a little bit short, too quickly. But anyway, obviously a near-term beneficiary. But if you have a speculative asset, if you have a trade and not a hold, do not get too greedy. I took my quick 30% and ran. Did you miss the boat on Vistera, VRT? You had, okay. Yeah, I've owned Vistera. I've owned Constellation Energy Group. What I was looking for, and those stocks have come back a little bit, so I might get reinterested. I've held them both before, but I like Williams companies, and I beg to differ. Williams companies, which I got into because I was looking for a cheaper indirect play, has actually been a big stock for me and for the people that jumped on it when I recommended it here on Benzinga. So I always, I believe in the theme. Of course, everybody does. Another $250 billion spent next year on AI infrastructure. And I will look for dips in these nuclear names like Vistera and Constellation Energy Group. And I'm always looking for cheaper ways to do it. Williams will probably be a trade for me too at some point. But as of now, momentum is working. So I'm going to stick with it. Why never actually tell your portfolio with cost basis like all funds and most personalities do? Well, I'm glad I'm a personality. Yeah, I mean, I guess I could do that. In some ways, I'm more transparent than most, right? One of the reasons I wanted to do this show is when I'm on CNBC or some of these bigger networks, you got to be very careful about what you say because compliance comes chasing after you. Man, I call names, right? You've heard me like. Boy, a couple months ago, I had a call that was a big bullish call right in the middle of the show on Super Micro before things turned worse for them. So in some respects, I give you more transparency than most. PayPal, is the future bright? I haven't been in PayPal for some time. It looks like there's some positive momentum there. I haven't been that enamored with the fintechs, including PayPal. But I will tell you what, I mentioned just now that the tech IPO window is starting to pry open. And we'll see what happens with this fintech company, Klarna, that's going to come public in the States in short order. That might be a nice tell for not only Klarna, but PayPal and the rest of fintech. Is First Solar really stressed in Trump 2.0? I think maybe it's over exaggerated at this point, but unfortunately and fortunately, part of the mystique of President-elect Trump is he's super unpredictable. And we do know that he has Elon Musk on his team. I take a look at the travel itineraries. They go everywhere together. It's really amazing that the bromance. I guess that's what a couple $100 million to your campaign will get you. So in the meantime, I'm going to stay away from some of these clean energy plays unless they really have a direct tie to AI infrastructure build out, because I don't know what that guy's going to do. They're obviously most of the stuff is going to be negative. But on the other hand, if Musk sways him one way or another, he obviously is talking about, in one sense, repealing the $7,500 tax credit in the United States to buy an EV, which would be a negative. But obviously, he's also talking about helping Tesla get more quickly to autonomous vehicles. So this whole thing, not just with electric vehicles between Trump and Musk, but the whole play, I would say, has a dark cloud over it in clean energy until we really see what Trump does. But obviously, the rhetoric was very, very nasty during the campaign. All right, guys. Well, that's all the time we have. I'm going to wish you a happy Thanksgiving because I won't see you next week during the holiday. I will be back afterwards. And stay tuned right here in a couple of hours. I'll be back to talk to you after we get Nvidia's results. Be well.